Hello and welcome to another episode of Industrial Minerals Newscast. Coming up, Rio Tinto talks through latest developments at Africa Mining Indaba, European shale gas developments on the horizon, and Chinese scientists make the first 15-inch graphene sheet. One of the world's leading mineral sand producers, Rio Tinto, is halting its expansion plans due to weak market conditions. The company aggressively pursued new feedstock sources despite already having a large asset base, but is now stopping the pre-feasibility studies at both its prospective Quebec plant and its new Madagascan mine. They said,
"We have made good progress on the TiO2 program, which aim to expand our mining and smelting capabilities in Canada, Madagascar, South Africa and Mozambique. However, against a background of weaker market conditions for our products and the need to manage and reduce our costs, Rio Tinto Iron and Titanium has reviewed the economic viability of the TiO2 program and decided to suspend it and stop pre-feasibility studies in Canada and Madagascar."
The company confirmed to our reporter on the ground at this week's Africa Mining Indaba in Cape Town that it is still interested in new mineral business acquisitions after the sale of its 57% stake in South African copper and vermiculite miner Palabora caused some industry speculation.
The sale of the Palabora stake doesn't imply that Rio Tinto is exiting business. We are still committed to acquiring more businesses.
The changes will not impact mine expansion at Zulti South at Richards Bay Minerals, nor exploration activities in Mozambique. Shale gas development has been given the green light in Romania, Lithuania and the Ukraine after government officials in Central and Eastern Europe made their latest move towards energy independence from Russia. Under the newly approved fracking regulations, US state gas exploration company Chevron Corp has been permitted to explore Romania and Lithuania's natural gas reserves, while the Ukrainian government signed a potential $10 billion agreement with Royal Dutch Shell. Now, a quick reminder, don't forget to sign up for the latest Oilfield Minerals Outlook event, Propant Prospects for Europe, taking place in London this April. Details of how to register can be found at indmin.com. Chinese barite prices have continued to slide this month as the North American drilling industry slows down and inventories in China continue to mount. North American rig counts dipped slightly in December as they did in 2011 and 2010, dropping by 8% or 32 rigs month on month. Year-on-year rig counts were also lower, dropping by almost 18% or 76 rigs to reach 353 rigs, according to Oilfield Services leader Baker Hughes. Stockpiles at ports and rail yards have increased over the last 6 to 8 months, leading to an increase in lease rates at the ports in China for storage, which in turn has put downward pressure on prices. Prices for Chinese barites, API drilling grade, unground lump and API lump have fallen from a range of $130 to $140 to $128 to $135 and $155 to $160 to $153 to $160 respectively. Barites drilling grade unground lump, FOB Chennai, have also dropped from $140 to $145 down to $136 to $142, while Chinese paint grade barites lump have fallen from $235 to $275 down to $235 to $260. Increased competition from global barite suppliers has also squeezed the market. Local authorities in Argentina have blocked Brazilian mining multinational Vale from receiving a tax break of up to $2 billion for its suspended Rio Colorado potash project in the country. The tax deferral was rejected as costs for the $6 billion project rose to complicated levels, according to the governor of Argentina's Mendoza province, Francisco Perez. Argentina has also extended Vale's deadline to submit plans for the project until the end of the month, provided it continues to pay its employees. Work at the project was put on hold indefinitely in January due to financial issues, and Vale was told to provide authorities with a definitive timeline for the project or risk losing its potash concession. Mendoza's government wants to safeguard local jobs, and unless a new timeline is presented, they say the concession will be considered abandoned. And finally, Chinese researchers have succeeded in making their first 15-inch layer graphene together with a 7-inch graphene touchscreen. The 15-inch graphene layer, which consists of a single layer of carbon atoms lifted from the surface of graphite, marks the highest standard of graphene engineering achieved in China to date. According to its developers at the Chongqing Institute of Green and Intelligent Technology at the Chinese Academy of Sciences in West China, the material is intended to be used as the base material for transparent carbon electrodes, as well as for the improvement of touchscreens on mobiles and personal computers. The European Commission has also demonstrated its commitment to staying in the graphene race by awarding a European graphene project involving several universities and companies €1 billion to develop the technology as part of its flagship Future Emerging Technology scheme. Now, a final reminder to sign up for the latest Oilfield Minerals Outlook event, Proppant Prospects for Europe. It takes place in London this April, and details of how to register can be found on the website at indmin.com. Well, that's all we have time for this week. If you have any comments or feedback, we of course would love to hear from you. You can get in touch via Twitter at indmin or contact us through our website indmin.com. Thanks for watching and see you again soon.